Basically, the bank will partner not only the African governments, but also the other development finance partners, development finance institutions, including, let's say, the World Bank, the EBRD, the IFC, the European Investment Bank, and Islamic Development Bank, for example, the Asia Infrastructure Investment Bank, but also, more importantly, as well, the private sector. And when we say the private sector, it's not only pension funds, institutional investors, but also private equity funds, developers, and strategic investors.
And I understand that you're championing the energy sector of the African Development Bank. But where will the African Development Bank be looking to seek investors?
You know, the African Development Bank and its partners, so remember this is a platform, will be seeking to attract investors not only within the continent, so that should be our first port of call, but also internationally. And within Africa, the pension funds, the sovereign wealth funds of Africa are also washed of money. They have trillions of dollars. Last year, for example, the assets under management of all our pension and sovereign wealth funds in Africa stood at about $1.2 trillion. And by 2020, it will reach $1.8 trillion. But a lot of those funds or assets are invested in bonds issued by foreign governments or sometimes African governments as well, and are invested in listed companies, for example. We want a part of that pot of money to be invested in African projects, both infrastructure projects, in the agriculture, in industries, in various sectors in Africa. But of course, we cannot develop Africa and meet the Sustainable Development Goals with only African money, even if we have trillions. We need to attract foreign investors, including the pension funds, global pension funds, global sovereign wealth funds. For example, global assets under management by pension funds, commercial banks, sovereign wealth funds is in excess of $100 trillion, growing roughly 5% per year. So that is also where we need to tap into.
And then in these investments coming into the energy sector, will they be squarely focusing on renewable energies?
Not necessarily on renewable energies. The bank lately, over the last 5 years, has had a focus on renewable energy, investing massively. Last year, for example, 100%, our generation portfolio, 100% was renewable energy. On average, over the last 5 years, I would say 80% of the bank's generation investment were into renewable energies. But it does not mean that we are focused on renewable energy, because we recognize, and in the same way the Paris Agreement recognizes as well, the fact that the energy transition will take time. It's not just overnight that we will switch and become all, I would say, using only renewable energies. It will take a time, so the bank will continue to also invest in fossil fuel, in particular gas to power, for example, because Africa has a lot of gas, so that gas can be utilized to develop the power sector. And more importantly, the base load, which you need to industrialize. So far, fossil fuels have played a key role, but also hydro also has played a key role. So going forward, we'll be fast-tracking our investments in renewable energy while recognizing also that fossil fuel is extremely important, in particular gas.
And then just looking back for a bit, what have been the major challenges in bringing in investments thus far?
You know, a lot of challenges, because first of all, in many countries, the regulatory environment is not really suitable yet. A lot of work has to be done on that front. And the bank has been supporting countries as well to reform by providing concessional money, by providing grant money from trust funds. But also you have technical challenges as well within the utilities themselves. A lot of technical losses, but also financial challenges. A lot of the utilities in Africa are not credit worthy. A recent study has showed that in 39 sub-Saharan countries, only 2 utilities are really financially viable out of 39. And 19 out of them, for example, are not meeting their OPEX cost, through the revenue that they're generating. So utilities transformation, utilities reform, to make them bankable, to make sure that they are run like private enterprise, even if they are mostly in majority owned by governments in Africa. You can be owned by a government, but run purely like a commercial and private enterprise that's charging tariffs that are cost reflective. That is one of the biggest issues. Often utilities buy the power at a certain cost, but the cost they're selling the power at is less, for example. And if you add all the operating expenses and other losses, then obviously at the end of the year they will not make money, which means then for them to buy power from private investors, they need the support from the government. And since the governments also are often very weak, those governments need support from the African Development Bank or from the World Bank, from MIGA, or from other development partners. And what we want to do through this forum is to make sure that at the end of the day, for identified sectors, for example, or projects, you have a sort of compact between the governments, the private sector, and us, the development finance community, to see how we can each play our role, bring our sort of tools to make sure that projects XYZ or sector XYZ moves forwards and attracts more investors.
Now, the African continent in general has a huge shortfall, if I can call it that, in the energy sector, with South Africa providing almost around half of the entire continent's energy.
Sure.
Now, going forward, what will be the African Bank doing to ensure that other countries play a bigger role in providing the energy generation of the continent?
You know, the bank's participation or involvement, and the bank and its partners, right? We are not working alone. We always work in partnership with others because the need is so big, but we need to coordinate our partnership. We intervene, let's say, on the generation. But very importantly, we intervene also in transmission, in particular, interconnection between countries or between regions. That's why in the past, the bank has financed many international, I would say, transmission lines. Let's say Zizabona, for example. We are working on that one where we are doing the connection between Zambia, Zimbabwe, Botswana, and Namibia, for example. If we look at Central Africa, last year, we funded the interconnection between Chad and Cameroon, for example. We have funded also the North Cove interconnection between Niger, Nigeria, Burkina Faso, and so on and so forth. The idea here is to create power pools, to develop the power pools so that Côte d'Ivoire could sell its power, let's say, or as far as to Nigeria, you know.
Now, there is also the DRC's Grand Igna Dam, which is, of course, seen as one of the tools that could alleviate the continent's energy burdens. How is the AfDB planning on tapping into the Grand Igna Dam?
Yeah, the African Development Bank has been a long-term partner of the DRC in trying to develop INGA since the 90s. We financed the rehabilitation, for example, of INGA 1. We provided grant money for feasibility studies also in the 90s. And in 2013, the bank provided almost $70 million to develop INGA 3. And INGA 3 has the objective to sort of produce 4,800 megawatts. And 2,500 megawatts out of that should be sent to South Africa. Some agreement had been already signed between the government of DRC and South Africa so that ESCOM can be one of the off-takers of that power, and that would help the project even be more bankable. We are advancing our work with the government. We hired many consultants, financial advisors, technical, legal advisors to help the government source private capital to help develop that INGA 3.
Amadou Hott there, the Vice President of Energy, Climate and Green Growth Complex at the AfDB.